This is exactly how you can see if different institutions around the world are buying or selling any market. If we know exactly what the bigger players are doing, we can position ourselves in alignment with the major market moves. So if you stay to the end of the video, I'm going to give you my exact strategy on how I've been using this in alignment with Wyckoff and smart money concepts to catch absolute bangers of trades like this and like this. So with no further ado, let's get right into the video. First things first, what are COT reports? COT just stands for Commitment of Traders, and it's basically a weekly report that comes out every single Tuesday, and it literally shows you what the orders are doing from these larger players. Now, who releases these orders? Is it just fabricated and made up by some random guy? No, this is literally coming from the CFTC, the Commodity Futures Trading Commission. This is a government regulated body, so this is information that is publicly available and you can trust. But Kieran, why would the institutions publicly show what orders they're doing? Because they're literally required to by law. And if you literally just followed what I'm going to show you in this video, you can see it so that you're in alignment with the major market moves. First things first is make sure you're subscribed, of course, so you don't miss any bangers like this. But secondly, just come over to Google and simply type in this website, Trading Stir. Once you Google this, just click the first link, tradingstir.com. And when you come on here, if you scroll down, you can see what we call COT legacy and COT reports for all different markets. Now, if you want to trade currencies, such as the Australian dollar, the British pound, the Canadian dollar, Japanese yen, you can literally see again the orders if they're buying or selling. Or if you want to trade grains, all the orders for grains, cryptocurrencies, so your Bitcoins, your Ethereums, or your indexes, some of my favorite markets to trade, such as the S&P 500, the US 30 and the NASDAQ, and of course, all the other markets as well. So all you want to do is simply click on COT legacy for the instrument you're trading. So in this example, we're going to go over and do a case study on a Canadian dollar short. Whoa, Kieran, what is this, right? Why is there so many numbers? Why is there so many charts? What is going on? Listen, I felt the same way first time I saw it. It's very, very simple. So what we have here is we've got orders for non-commercial players, commercial players, and then your non-reportable orders. Now, what are the different ones? Who do you want to pay attention to? Because you can see non-commercial, they're long 19,000, but then the commercial players are long over 278,000 orders. So who would you pay attention to? Do we pay attention to the total? Because if we look at the total orders, there's over 304,000 long orders. But then why am I selling the Canadian dollar? Because you need to pay attention to the real people who trade for profit. So the commercial players, these guys are hedgers. And what that means is their goal when they trade is to mitigate risk. So they're typically going to do the opposite to the main market direction. So if I was you, I'll just ignore the commercial players, ignore total, ignore non-reportable, and focus on the non-commercial players. Now remember, this data does come out every single week. Every single Tuesday, it'll be updated. And we can see here, right, for the Canadian dollar, they have 19,000 long contracts and over 170,000 short contracts. So if we now open TradingView, and what I'm looking at here is the Canadian dollar futures. If you're a Forex trader and you don't know what the futures are, this is the single currency, just the Canadian dollar. Now, of course, if you don't have a futures trading account, I know most of you trade foreign exchange, you can now trade USD CAD, which is the inverse to the Canadian dollar futures. So if we see in, right, that CAD has been selling off and we can see, right, it's just absolutely melting and melting and melting. Why is that? Because they are net short over 170,000 orders. Like, it's really not that complicated. Look up how many orders they have. And if you can see that on the Canadian dollar, they're net short, go to the market and confirm that with your strategy. So if we obviously go into the chart and we see that it's going higher, well, obviously there's something wrong and we need to pay deeper attention to find out why. Now we're going to speak about why they're net short and exactly why the Canadian dollar is selling off, because these COT reports, this is not just the end all and be all. You have to understand the bigger picture and why they're net short. Now, of course, I'm going to educate you guys on exactly why they're net short so that you can stay on the right side of the markets and actually know why the market is going in the direction it is. If you're not trading futures, here's a little cheat sheet. Australian dollar futures, this is AUD USD. British pound sterling is GBP USD. Canadian dollar is USD CAD. So if you see the Canadian dollar net long, you'd want to be short on USD CAD. Or in this case, they're short on the Canadian dollar, you'd want to be long on USD CAD. Euro for Euro USD, Japanese yen for USD JPY, and for USD JPY, that's going to be the inverse, so the opposite of what the COT orders are showing on the non-commercial side, just like with the Canadian dollar. Again, we can see that Canadian dollar is net short and Canadian dollar futures are selling off. But I know some of you don't have access to the futures markets, so you'd be trading, a CFD contract, which would be USD CAD. So when we look at the USD CAD chart, we can see that the USD CAD chart is going up because we're trading against the Canadian dollar, meaning whatever the Canadian dollar does, USD CAD will do the exact opposite of that. And this is also going to be the same for Japanese yen. So for example, if we can see them net short on JPY futures, we'd be looking to buy USD JPY. So again, if we open USD JPY, this explains why USD JPY has been going higher, because institutions are selling the Japanese yen, which means USD JPY will appreciate in value. We've got the Swiss franc, and this is the same as well for USD chef. It's the inverse. So if you're trading Swiss franc futures, you can follow what the non-commercial players are doing, right? We can see that they're net short on the Swiss franc. So USD chef should be going higher. And long behold, how convenient, the USD chef chart is in an uptrend, because again, Swiss futures is the opposite to USD chef. Now, of course, if you were trading like the S&P 500 and US indices, what you want to realize is the indices, they correlate. So if you're looking at SPX, always correlate SPX with the NASDAQ and the US 30, because they should all three move very similarly. Now, again, they're not going to move one for one just because US 30 has gone up 10 points. NASDAQ might not move up 10 points. It might move 8, or it might dip a little bit. But generally, they'll correlate. And what you want to do for indices is you want to look at generally what they're all doing. For example, if we see the S&P 500, it does show that they're net short. If we take a look at the NASDAQ, we can see that they're net long. Again, non-commercial players, ignore everyone else. And if we check the Dow Jones, which is US 30, we can also see that they're net long. So if 2 out of 3 are net long, all 3 of them should generally be going higher. So if we take a look at the Dow Jones, we can see, right, it's appreciating and it's going higher. We can see the NASDAQ is also doing the same thing. And what do you think ES is going to be doing? Right, you guessed it, it's also going higher. Now, for me, this is still not enough, because this is just one piece of confluence in my arsenal. And as traders, as professional traders, I don't just look at one thing in isolation. I like to build a narrative and a storyline to understand the bigger picture and build confluence. Confluence just means having multiple pieces of evidence that support your bias. Just like, for example, if you're a lawyer, you're not going to say, oh my God, this guy's a criminal because he was in the same country when this guy was murdered. No, you're going to build enough evidence. And once you become convicted, then you can make your case. So just because, for example, COTs are showing you bullishness or bearishness doesn't necessarily mean that you're instantly going to buy or sell that market. What you want to do is look into why that is actually occurring. So at the current date of recording, the 31st of January 2025, what is going on and why are they net short on the Canadian dollar? So this is mostly due to something called the monetary policy and the interest rate differential. Now, Kieran, what is that? That's some big words. It's very, very simple. You need to understand a currency is going to be driven, the value of it going up or down ain't going to move because of squiggly lines. It's going to go up or down based on the central bank's monetary policy, their money policy. Again, very simple. If you're trading currencies, currencies have currents and they flow just like water. What controls the flow of water in a river? A river bank. So a central bank will also control the flow of money in an economy. And once you can understand what the central bank is doing, you're going to be able to know without even looking at a technical chart if that currency should be appreciating or depreciating in value. If we do a quick Google search and we look at the Bank of Canada's interest rates, this is a great website called Trading Economics I always use. We can see recently the Bank of Canada has just dropped their interest rate to 3%. And because they've been devaluing their interest rates, this is also going to devalue the currency, because in bigger investors, they don't actually buy the currency. They buy something called government bonds, which have a yield attached to it. So if the interest rate is going down, that means their yield will go down. And again, in simple terms, the yield is just their return on investment. It's just their bang for their buck. So if you've, for example, got your money parked in the Canadian dollar and the interest rates are going down, so your return on investment's getting less and less and less, why would you keep your money in there? It doesn't make any sense. Wouldn't you want to put your money somewhere where you're going to get a better yield and a greater bang for your buck? well, where could I put that, Kieran? Where would it go? And one of those places right now is the US dollar. And commonly, the Canadian dollar is traded against the US, right? The USD CAD, that's what most of you want to trade. So if we actually go and check the federal funds rate for the US, right, their current interest rate is 4.5%. So if the Canadian dollar's interest rate is 3% and the dollar is 4.5%, what's higher? Very simple, right? The dollar. So people are pulling their money out of the Canadian dollar and starting to put it into the US dollar. And that's why the COT reports are now reflecting that the non-commercial players are net short. And what do you think they're going to be on the dollar? Of course, you guessed it, they're net long over 28,000 positions. And what we call this is something called an interest rate differential. I know it really sounds complicated. It just basically means the difference between the interest rate of one currency compared to another makes one currency more attractive for investment. So one currency will go down whilst the other goes up. And that's what will cause your chart to move up or down. So in this example, right, we know that because the US dollar is more attractive, USD CAD should be going higher. So when we look at USD CAD, we can see the chart actually starting to reflect that. So let's get into a case study and show you an actual trade that I called in my Master of Coin mentorship, where we go live and do live trading calls 3 times a week. And a bunch of my students caught the same trade as well. So if you want to catch these trades live with me, go down to the description, apply to join my mentorship community, or if you want a faster response, you can message me and contact me directly on my Instagram or email address down below. So again, we've checked the COT reports, we've checked the fundamental analysis, and we know that the USD CAD should be going up because Canadian dollar futures are going down, the Canadian dollar is depreciating in value, and the US dollar is appreciating in value. So what I want to look for now is the technicals to confirm this. Fundamentals tell me where the market's going, technicals tell me when I should enter the market. So when we are looking at this chart now, we want to confirm that fundamental bias. So we know that USD CAD should be going higher because the Canadian dollar is going to be selling off. So what I want to do is I want to look for my Wyckoff reaccumulation. Now, again, if you don't know what that is, I've got a whole Wyckoff bootcamp all on my channel, literally called the Wyckoff Bootcamp. You can check that out for free. But essentially all this is what we call manipulation of lows followed by a break to the upside. Now, how do you know what manipulation is going to stick? Well, this is where we can add our extra confirmations and our validation criteria. So when you see that liquidity sweep, followed by the high volume and the market reversing, followed by your validations of the prior reaccumulation, because liquidity sweep doesn't mean anything unless you can validate what liquidity is sweeping and all the other validation criteria before. Again, I've got videos on this. But once we can see that high volume spike, followed through the invalidation of supply to the left, this is what's going to confirm my reaccumulation. So all we're going to do is fib up our manipulation and wait for the market to return to our key zones. Now, you've got 2 ways of entering this. If you want, you can set a blind limit order. But here's the thing. Look at the risk to reward. You know, I don't want to be taking a 53 pip stop loss. So I'm going to use my lower time frame confirmations. And when it comes back down to my point of interest, I'm going to drop down to a lower time frame to validate if I can see proof of demand coming in. And again, what's proof of demand? A lower time frame accumulation. So again, we're at our key zone, our 80%. We can see the market comes in, puts in our seller's climax. After that, we get our automatic reaction, secondary test, another test, up price action, followed by our spring and our final manipulation. Now, upon the sign of strength, after the schematic has confirmed itself, I can now fib up my manipulation and I can go to set a limit order on my 50 and 80%. And because I'm entering on these lower time frames, I can zoom out and have a higher time frame target. And you can see this is producing a 1:16 risk to reward ratio, which meets our minimum of a 1:10. But it gets better because we can refine this further. Same thing, when it comes back to our entry, what does it give? Another lower time frame schematic. So we can come in, do the same thing and fib up that manipulation and look to take an entry off the 50 or the 80% and then let this play out. Ends up hitting our stop loss at the 50%, but then triggers this on our 80% order. Oh my God, Kieran, you don't have a 100% win rate. Yeah, welcome to real trading. You're going to have a few losses. But look at our winners, right? This is a 1:37 risk to reward ratio, meaning we can lose 36 of these trades, win 1, and all those losses are going to be eradicated. Of course, I have a higher win rate than that, but now it's just time to zoom out, and let the bigger players do the heavy lifting. Because we know, right? They're long on USD CAD, they're short on the Canadian dollar. It's going to drive the value of this market up. And because we position ourselves with a higher time frame point of interest, and with the fundamental narrative that they're short on the Canadian dollar, it's going to keep driving this up. And once you know these bigger market directions, you're going to see all these little news stories pop up left, right, and center. Like, for example, what's just come out today? Trump is now putting out massive tariffs against Canada. But this is the thing, you don't need to try and guess on what's going on with all these little mumbo jumbo news events like that, because this is what we call qualitative analysis, these news and these stories. I don't pay attention to that because it's subjective and it's just palaver. It's literally just an excuse for liquidity in the markets, which just means it's going to create big moves. But when you can pay attention to what the bigger players are doing, the monetary policy and the most important things behind the central banks, couple that with the right technical system and the right mentorship and support to make sure that you're actually applying it correctly. Because here's the thing, when I was trading by myself, I thought I was applying everything correctly, but I quickly learned that my trading account was telling me otherwise. I was stacking up loss after loss, blown account after blown account, failed challenge after failed challenge. And I was wondering what's going on. Is it the strategy? Is it the mentor? Like, what do I need to do? Do I need to work harder? Do I need more discipline? But truth be told, it was none of that. I just needed the right support system and the right community around me. And that's why we created the Master of Coin Mentorship, so that you can have a safe space to come in and network with like-minded individuals who are trading full time. And I'm not talking about just me. We've got a lot of other traders inside our community that are using this same strategy and these same techniques day in and day out. If you want to join that, you're more than welcome to go down to the description, apply for the community or one-to-one mentorship program. Or again, if you want that faster response, direct message me or send me an email in the description below. Okay, so thank you everyone for watching. Don't forget to comment, like, and subscribe. Let me know one thing you liked, one thing you learned, and I'm gonna see you all at the top because you already know, man, that bottom is way too crowded. Sheesh.